Hi everyone, welcome to Malethabo Accounting Academy. So on today's tutorial video, we're going to look at value added tax, also known as VAT, also known as VAT. Now, what is VAT? VAT is a tax, it is a tax percentage that is levied on goods and services, or that is charged on goods and services. Currently, the VAT percentage is 15%. VAT is administered by the South African Revenue Services, also known as SARS. So what happens is that the business collects VAT from customers on behalf of SARS. So what the business does is just does the collection of this VAT and submits it to SARS, and then SARS does the administration. Businesses that are registered for VAT, we refer to them as VAT vendors. Now, I would like us to look into what qualifies a business to register as a VAT vendor. So, businesses that make or generate an annual turnover that exceeds 1 million. Those businesses are compelled by law to be registered as VAT vendors. And then businesses that they are compelled. So it's compulsory for those businesses to register as VAT vendors. And then businesses that make an annual turnover that is more than 50,000 but less than 1 million. So for those businesses, I'm going to repeat that one. So businesses that generate an annual turnover, meaning an annual sales, which is more than 50,000 but less than 1 million. Those businesses, for them, it is voluntary to register as VAT vendors. It is optional for those entities or for those businesses to register as VAT vendors. And then businesses that make an annual turnover that is less than 50,000, those businesses are not allowed, they do not qualify to register as VAT vendors. So by law, businesses who are VAT vendors, they are required to keep an accurate record of all the VAT transactions that take place in a business. And they are required, businesses who are VAT vendors, they are required to report to SARS on a regular basis. So how do they report to SARS? They report to SARS by submitting what we refer to as the VAT return. So what is the VAT return? So a VAT return is a summary of all the VAT transactions that take place in a business at a specific period. Right? So on your VAT return, that is where you're going to see your VAT input amount and your VAT output amount, as well as the difference between the two amounts. Right? So now the question that should arise is, what is the VAT input amount? So the VAT input amount is the amount of VAT that the business pays, or that the business is charged whenever they buy from their suppliers. So remember, as a business, we also buy. So we buy stock, we buy raw material, or we buy inventory. We buy inventory from our suppliers, and we are charged VAT when we purchase those items. So the VAT that we pay whenever we buy items from our suppliers, or we buy goods and services or whatever, raw materials from our suppliers, that VAT is what we refer to, that VAT amount that is what we refer to as the VAT input amount. And then what is the VAT output amount? So the VAT output amount, it is the VAT that we collect from the customers when they buy goods on items that are levied, that are VAT levied, or that in which we charge VAT on. So remember, when the customers come to our business and purchase items which they have VAT levied on those, we actually are collecting that VAT as a business on behalf of SARS. So that VAT that we are collecting from customers, that is what we refer to as the output VAT. So now, By law, by law, businesses are allowed to claim back. So businesses are allowed to claim back the input VAT from SARS. So remember I said input VAT, it is the VAT that we pay as a business whenever we purchase from our suppliers. So the law allows businesses to claim back that amount of input VAT that we pay, to claim it back from SARS, right? So we are allowed. So as a result, we generate this, or we prepare, or we submit this VAT return. In this VAT return, that is where we're going to have, as I said before, that is where we're going to have our input VAT, and then we're going to have our output VAT, and then we're going to have the difference between the two and submit that. So now, at that point in time where we've already bought and we charge VAT, and customers, they bought in our business and they were charged VAT on those items now, and we are submitting this VAT return. So at that point in time, that means what is happening there. So what that means, as a business, SARS owes us. Remember, we can claim now, we're allowed as a business to claim input VAT from SARS. So at that point in time, what it means, SARS is owing us that input VAT amount, and we are owing SARS that output VAT which is due to SARS. Remember I said we collect from customers output VAT which is going to be paid to SARS, but then SARS is also owing us this input VAT which we paid. I hope I'm making sense, which we paid to our suppliers, right? So let me make an example, or rather let me just make a scenario, or let me just explain this one thing. I want to explain that. So in that position, I just want to clarify that part where now SARS is owing us the input VAT that we can claim, né? And we as a business, we have this VAT amount that we collected from customers, and we are owing SARS that amount. So now, instead of, I want to get to this point, instead of SARS giving us the money they owe us and us giving them the money that is due to them, so instead of that back and forth, what can happen is, because we already have this output VAT with us which is due to them, but SARS is owing us, what we can do, we can take from the output VAT amount that we have which is due to SARS, we can take what SARS owes us, and the difference we can then give it to SARS. So that is what is happening in actual fact, right? So as I was saying, good team, at that point in time, that means SARS is owing the business that VAT amount which is claimable, and as a business, because we've collected this output VAT from customers, that means we owing SARS. So instead of doing the back and forth where SARS give us money and we giving SARS money, what is happening is we look at what we've already collected, meaning as a business, we look at that output VAT and we look at that input VAT. So say, for example, the input VAT is more than the output VAT. That will mean the SARS will owe the business. Let me repeat that. So in a case where the input VAT is more than the output VAT, remember, we need to get the difference between the two figures so that we can know why do we want to establish the difference between the two, so that we can know who owes who how much, right? So what I'm saying is that, so if the input VAT is more than the output VAT, SARS owes the business. If the output VAT is more than the input VAT, we owe the business. I hope that makes sense. I really hope that makes sense. I want to make an example quickly. Oh, this video is going to be long. I don't know, maybe I can do a short video afterwards where I explain this part thoroughly. I feel like I haven't done justice to this part. Yeah, okay, so that brings this video to an end. I think I'm gonna make another video where I explain the whole input vets and the difference and everything and who owes who, how much and why and what happens. Thank you very much for watching this video. I hope it is actually helpful, and I hope that you are able to understand what I've explained so far. But if you do not understand, you're more than welcome to actually ask me on the comment section if you've got some questions. Yes, and you can actually as well make like recommendations in terms of what you would like me to focus on, or base my videos on, in terms of which topic would you like me to tackle. But yes, thank you very much for watching.